All right, so hi everybody. My name is Shafi and I'm the co-founder of Coverager. We're a media company covering mostly insurance and insurtech. And today I'm joined by Marc Weill. He is the senior investor at Two Sigma Ventures, which basically invests in early stage startups, not just with insurtechs, but they're no stranger to insurtechs, and they're certainly no stranger to Coverager because we've had the pleasure of hosting events at their facility. And Marc, when I think about it, the first time I got a chance to meet you was at a startup boot camp event, which was probably three and a half years ago. And I know I'm not planning to travel anytime soon. Are you traveling anytime soon?
Probably not. I'm probably staying at home, although I am dreaming of traveling.
Oh, so I don't dream of travel because I like being at home, but this is a bit too much because the past week, honestly, or the past 60 days have been a lot of working from home, socializing from home. It's been too much. And one of the reasons why I invited you here is, so as some of you know, I work with my siblings, not only with my siblings, but I do work with my brothers, and we argue a lot. And to make all of us feel good about it, I always say that when smart people argue, they process information differently, or they have access to different information. And I think this hits home run with everything that's is happening right now with the pandemic, because there's so much information, so many views, everybody's processing information differently. And this is your chance to hear from Marc what he's been seeing in the space and where he thinks the opportunities are. So feel free to ask questions throughout. Interrupt us if you want. I'll be looking at the Q&A, and I've prepared some questions myself. So Marc, let's go back in time before I knew what wearing a mask is and forgetting wearing a mask and being called at it. What was your views on insurtech and even insurtech and FinTech?
My views on insurtech. My views on that area were, I think it was nuanced, because I think there's a lot of different parts of FinTech and insurtech. It's not just one overall area. So on the FinTech side, I was actually super interested, and still am interested, in the underbanked and sort of how do you help solve these income inequality problems in the United States, because I think that's a big, big problem. I think it hurts our country, and I think it needs to be solved, over the next period of time. I think COVID, I'm going to bring COVID in already. I think COVID has exacerbated that problem and shown some of our deficiencies in that area. In that, I know at least in New York City, certain groups have been way, way, way more severely impacted by COVID. On the insurtech side, we were really looking at companies, and we just invested in one today, where they're doing pretty interesting things in sort of new types of policies, or sort of reimagining some of the older policies that were out there that were not that efficient. We just did a deal in the general supplemental insurance space. We looked at things at long-term care and helping people age in place, and sort of, how do you sort of work that out so that people don't have to go to nursing homes. I actually wish we would have looked closer at that, because nursing homes turned out to be a very bad outcome for people. So I think there's going to be more insurance companies and more insurtech companies maybe focused on that space. How do you help people age in place? So those are a couple of areas. The other area we've seen a lot in is on the data play. People using computer vision to analyze airplanes, satellites, all this other stuff to look for homeowners insurance or commercial insurance. We've seen a lot of companies in that space. We've met some really smart founders, interesting companies, and we're still trying to figure out what is the market size and sort of can it be a big company over time. And so
so I think the company that you mentioned, the Clara Insurance.
Yes.
Yeah, okay. So Clara Insurance announced a $5.5 million raise today, also supported by Two Sigma. And I remember when we first covered it, it got a lot of interest, and people were questioning on Twitter, how are they going to do that? They have some cool technology. I didn't see it. I believe it. I read it. I'll take your word for it. But it seems very timely. So when you were talking about essentialism, obviously you've mentioned doing something with senior population. You also talked a little bit about valuation, and valuation in Intertek was always a big topic. Do you justify some of these companies? We've seen some companies struggle. We've seen layoffs. We've also seen companies bounce back, guys. So not everything is on the record yet, but there is reason to be kind of optimistic. What is your take on Intertek valuations, M&A, startups that are still maybe earlier on looking to raise? Do you still see that momentum picking up?
Yeah, what I would say is a couple of things. First of all, Two Sigma, we just raised our third fund, and so it's only 20 or 25% invested, and so we're still in business. And I've actually, apropos of the announcement this morning, we're still making investments, and we're still looking at companies, and we're still, everything is now not in person. Everything is over Zoom, so the process is probably a little bit slower, so you have to be patient. But we are making new investments here. So that's number one. Number two, for companies that are already in business and doing things and out there, we're telling them, cut your burn if you can. Try and make sure your husband or hold on to your cash, for 18 months from now, because no one knows what the environment will be. Make sure you have enough cash to stay in business and focus on really iterating on your product. So those are the areas, advice that we're trying to give our companies, is really just to stay in business. And my guess is valuations would and probably should come down a little bit. And,
why?
What?
Why? We talked a little bit about this, right? Differentiators and well, you know what? Let's separate this by line of business, right? There are Insurtechs in the life insurance space. There's P&C. And insurance, it's all about the details. You can't generalize this industry. There's just too much. And I don't know, maybe some of this ties into your history with Citi, and you're familiar with the legacy insurers. Do you see a line of business that will do better than the rest, or do you look at it Insurtech as a whole? And
well, I'll take the life side first. I think the life side is difficult. For two reasons. One is on the investment income, there is no investment income. You can go out 30 years and get 1.3% or 1.4% plus corporate bond yield, so a couple more percent maybe. So it's really hard to have life insurance policies with no investment income. On the annuity side, also the same thing is, the crediting rates for annuities are very, very low right now. So I think the life insurance side, especially for longer dated life products, you got to be super careful. On the P&C side, I'll do the negatives first, and then I'll do the positives.
Start with negatives. Okay.
I'll have some positives in there along with the negatives. On the negative side is, number one, investment income again, because the P&C portfolios are generally shorter. So again, there's very little yield in there, so you don't get that investment income spread on a P&C policy. And then the other thing is there's a lot of unknowns here. What will happen to people? Will there be more workers' comp? Will there be a lot of knock-on effects? Will there be a lot of lawsuits, either business interruption insurance? Will there be liability insurance? Somebody goes into a pizza parlor and claims they got COVID from the pizza parlor. I think it's hard to get everybody to sign a waiver when you walk into a pizza parlor. In order to buy a slice of pizza, you got to sign a waiver that you eliminate all liability for the company. So I'm hoping Congress does something for that. The third possible negative is climate change, weather-related effects. It appears our weather is causing issues for a lot of the P&C companies. The positive side is that will lead to a tight, firm market. And generally, P&C companies have done well when the rates are firming up. I think the business has been overcapitalized for many years, and rates were pretty soft for a lot of years. I think now there's a chance that rates firm up and things will get tighter, and they'll be able to price their policies accordingly.
Gotcha. Okay. And do you see that as equal opportunity for startups and for insurers?
Yeah, because at the end of the day, the startups have to write policies to somebody, and so they got to, somebody has to take the paper. So if the insurance companies aren't willing to, be able to price the paper properly, or there's no one willing to take it, I think they have a problem because most are not doing full stack insurance companies. The startups, at least initially, if they got in early, the interesting thing about startups in the P&C space is that they'll be able to micro price. And when you micro price, the market becomes much more efficient, and you may be able to have a lower cost customer acquisition cost because you're going to price the policies really according to your risk. So if I've never gotten into a traffic accident or a car wreck and I'm paying the same rate as, don't take this wrongly, like my wife who's gotten into 3 accidents or whatever, I should pay half of what she should pay.
I always give the example that I passed. So in Israel, it's very hard or challenging to pass the exam. We have a lot of accidents in Israel. I passed on the first run. Avi passed on the third. That's only because he's arrogant and doesn't pay attention. I'm a really good test maker. He is the better driver, 100%. There's so much that goes into it. So anyway, data and data science.
Yeah, I was going to say that to you. My wife is a really good driver, and I have not driven. I think I've driven 5 times in the last 7 years. I would not trust me to drive.
Well, my sister-in-law is probably better than my Avi, so there you go. There is, speaking of P&C, we have a question from someone at the audience. 2 Sigma invested in Remote, a company enabling remote work. Do you believe remote work or working from home will catch on? And how do you see this impacting commercial insurers?
That's a good question. I can give both sides of the coin, and I think we're path dependent on that. My basic philosophy, and maybe because I'm over 60, people actually like working with other people. And so I think people like being around people. That being said, I don't have to be around people as much as I was before. So I think I can be around people less. So I think that there will be more remote work going forward. That's my conclusion. And maybe that leads to, in office buildings, maybe I have more square footage around my desk than before. At 2 Sigma, you saw our offices, I was right next to 2 other people.
Offices.
We do have great offices.
Yeah.
I miss our snack bar. I miss the event space and being around all the people, but we'll be there one day. And so I think people may get more space. I think they may alternate on days or take shifts in the office so that I think over time there'll be a less need for office space.
There may be also a chain reaction, because if Twitter says you don't have to come to the office, it may require Facebook to say the same thing. Especially, it all depends on how the employees view this. If you're talking about maybe freelancers or small businesses to begin with, maybe for now, because cash preservation is an issue, just like you said, hold on to your cash. That's also an opportunity to work from home. So there is a separation between wanting to work from home, being forced to work from home, and kind of something in the middle where you can have a chance to enjoy both worlds when it makes sense.
Right, I'm a middle, but my daughter, her boyfriend is a back-end engineer. They just moved to Austin, Texas, and he just got hired at a large blockchain company, and he is completely remote and will be remote, and will never have to. I don't think we'll go into the office. So there are certain.
About blockchain.
What do I think about blockchain? It depends on what day you ask me. I have never bought Bitcoin. I am looking at blockchain for certain applications. I'm looking at blockchain in regard to, can you put certain, it's more like a database. So and it depends what use you want to use it for, but more of a cheaper form of database that can ingest data. Bitcoin, I am getting more positive on Bitcoin the more we run a budget deficit. And the more money the government prints and puts out in the world gets me a little bit more positive on Bitcoin. So, you know, in that we're depreciating our currency over some period of time and depreciating the dollar over some period of time. So that's a whole longer story about relative value in the world.
So I asked you a question before we started here. This is a personal question, right? From 1 to 10, how likely you are to head out of New York City. So we're both in New York City, and one of the things that my brothers and I talk about is what's going to happen with rent, with people moving out. At least that's what we hear, people wanting to move out. I was thinking about this in the context of InsurTech. There are a lot of new startups out there that made an effort to kind of target the urban millennial. Now I know you're bearish, or yes, I think you like P&C startups a little bit more than you like life insurance startups. Right. That's going to prove to be a challenge for them.
Yes. Yeah. You know, I think millennials or Gen Zers or younger people will probably stay in the city.
Okay, that's good.
Yeah, I mean, you have to look at who you are in the population and how does COVID affect you. I think people under 40 that have no health conditions can probably go in the subway, be okay, commute to work, and probably life will be okay. I hate to say my age bracket, I have to be more cautious. I'm over 60, you know, I used to take the subway all over the place. What will New York be like without the subway? I mean, I hate to say this, how old I am, but I've been taking the New York City subway since the early 70s. And believe me, I think the subway today is like it's like a Rolls Royce compared to what the subway used to be in the 70s. So, but if I can't take that.
Explain again about taking the subway. I miss being stuck in Atlantic or.
Yeah.
God forbid you ever go there. You don't want to go there, but yeah.
Yeah, it's way better. But
so, two final questions. One, you know, so I moved to the U.S. in 2007. I can't say that I had any perspective on whatever happened in 2008 because God knows I was making $45,000 a year as is. Is this anything like what you have seen or witnessed in 2008?
No, and I think this is completely different. I also think it's different than 1999, and I've been seeing crashes since 73, 74, 87, 89. You know, I've seen a lot of them, and 99 was a financial problem. You know, it was the NASDAQ. You know, just sent prices all the way up, and there was really no revenues, no business model, anything like that. So that was really a financial issue. 08, 07, 08 was, you had both a financial problem and a real economy problem. And it took the Fed a period of time to solve the financial problem, the liquidity problem, but you still had a real economy problem. Right now, we have a pandemic problem, which no one really has dealt with before. The good news now is that the Fed has a playbook, and they, you know, really, I think they've eliminated financial risk or financial meltdown, where people just lose confidence in the financial system, start pulling money out, banks collapse, and the whole thing unwinds. So I don't think we have that now. I mean, the economy basically shut down. We should have GDP growth of minus 20 to 30% this quarter. You know, unemployment at 20+% this quarter. I tend to be an optimistic person. I think we will start getting back to work here. I think we will have therapeutics. I'm waiting for the vaccine. You know, discovering a vaccine is very complicated. You have to go past the headlines, but I think there's so many people working on it, so much money out there working on it, that I think the vaccine will happen at some point. So I think we'll really need either great therapeutics or a really great vaccine to work to get everybody back to normal, or what was normal. I think there will be changes. And I think what's super interesting right now is what will our society look like post-COVID and post-vaccine and post-therapeutic, and what changes will we be making and what opportunities will there be?
it's food for thought, because it's so easy to kind of go, one level deep and understand that telemedicine is booming, retail not so much, travel, you can forget about it. But then what happens after? What happens once we accept that? And who's going to start, coming into the economy, and with what services, right? We can all say essentialism, but what does that look like, and to what demographic?
Right.
Final positive thoughts or piece of advice, business or personal, Mark?
Business or personal? I'm always a believer. If you find a problem that you really like and really want to solve, go solve it, and and do something you're passionate and really like. And I found when I've done my best work are things that I'm really, really liking, involved with. It becomes all encompassing, and I think it's just really cool and great. So, the United States will get through this. We have a very divided political system, but we've had that before. We'll all get through this stuff. So, I think it's important to focus on where you really see opportunities that you're passionate about and really want to try and solve, and really work on that.
I love it. I believe in it. Life goes on, right?
Yep.
That's what they say. So thank you so much, Marc Weill, Senior Investor at 2 Sigma Ventures.
Senior Advisor.
Senior Advisor. That does investments too. Thank you so much for joining us today. Bye, everybody.
Thank you for having me.